Welcome to my channel, everyone, and in this video we're going to do a trade recap going over some trades that I took along with some market context from the past 2 days, along with some very good trades that we took as a community in the Discord room. If you're new here, make sure to hit that subscribe button below, and also if you want a very good trading resource, I'm going to link my Instagram in the description. I post daily trading recaps like this along with very good trading tips and tricks. It's a very good resource and you're missing out if you aren't following it. And without further ado, let's get right into the trade breakdowns. So today's Tuesday, February 2nd. Later on in this video, I'm going to recap everything that happened yesterday, which was Monday, February 1st. But as always, we're going to go through the S&P 500. It's my favorite instrument to trade. It's one of the most liquid markets and it works very well with supply and demand. Today there was really no action. There was no interesting, moves. There was no plays. There's usually, decent amount of setups. But today we opened up pretty higher than what we saw yesterday. We also are doing a, V recovery. So V recoveries tend to be pretty strong. Opened up, the market started rallying. We didn't have any demand below that we triggered. We also had supply, but again, supply zones do not mean to short the market. Supply zones are just advertisers to price. We need price to validate us confirming that we could take this trade to the downside. And in this case, buyers and the demand was very strong at supply. So nothing here on the S&P 500. The main trade that I took today, and it was a very big winner, was TLRY. Now I posted this in the Discord room. Every time I make these trade recaps, I get tons of messages. How do I join? The Discord room is only available to members of the course. Once you have access to the course, you will have access to this Discord as well. But the plan was TLRY. We were watching this setup. I've been watching this develop for the past 2 days. If I pull up my other charts here, to get a little context with Tilray, ticker symbol TLRY. If I make this on a daily chart, so what you're gonna see is we were kind of flat since March, consolidating in a very tight range. And as soon as volume started coming in after earnings, the stock started to make higher lows and it also started to make lower highs. So we were getting tighter and tighter, wedging, and it wasn't until the new year where we started to break out of this tight range that we were in for, the previous 9 or, 8 or so months. So we started getting momentum to the upside. Every rally was getting bought up. Volume was increasing. Now we're trading in the millions for volume compared to, what we saw when he was quiet in the low 6 millions. Today we had a volume of a little over 60 million. So price was pretty strong. We were moving up and then we started pulling back. And a lot of people see pullbacks as, the end of the world. They think that the stock's going to stop, moving up and it's going to start continue going down just because we're in a little minor pullback. And these are natural reactions to the market. There has to have some profit taking. There also has to have some pullback so buyers could get filled at a little better price, and then we can look to take it long, speculating that new demand is going to form. So other than a daily chart, and we were making this nice tight pattern, if you go to, let's say we'll do 30-minute, you're going to see exactly what I mean. So this upper trend line down here, which comes into price, rejected one day. So what I saw was sellers being very responsive. And what I mean by this is every time price was coming up, sellers stepped in. The next day, price came up, sellers stepped in. Following day, price came up, sellers stepped in. So in between this $19 to about the $21 mark, there were sellers were very, very responsive. And this was telling me that sellers are in control here. Sellers have short positions. And if price starts moving up past the zone and we start proving otherwise, we could potentially see a nice rally because these shorts and these sellers are going to be underwater. Fast forward to today. We were actually watching this yesterday. This was on Watch It Alongside, but it wasn't until today that we got nice volume to confirm it, and we finally got that break above that trend line. So if I pull up my Discord here, what I was really watching was we broke out pretty strong. I wasn't focusing too much on a smaller time frame. I was just watching to see if we could hold above the $20 mark. So now going into an intraday chart, if I go to a 15-minute, we finally broke above, and I took my entry on a 5-minute chart once we were consolidating above VWAP. And This is the love-hate relationship with a candlestick chart, is you can really not see the picture being painted until price is actually trading. And you could look at it as the artist actually sketching the picture. So what I saw was price was coming down. It looked like we were rejecting this upper trend line briefly for 5 minutes. Price came down, buyers propped it up. Buyers proved to be strong in this $20 mark to about 1980. Quick little 20 cent range. And I took that long as soon as I saw we got that reaction. Price came up the following candle, and this is where you have to understand what type of trade you're looking to put on. If you're on a 5-minute chart, you would have saw this candle right here as it was developing. And a lot of people that don't have patience, a lot of people that can't follow the trend may have got shaken out. Whereas you're on a 15-minute chart, the next candle was a super strong rally candle, and it wasn't until the third candle at 10 a.m. Eastern that we started to pull back. So again, going to the little bigger picture here, I like to use half targets, and I like to use full dollar targets as areas that I want to see buyer and seller interest. I want to see who's going to get rewarded, and I want to see who's going to get frustrated, which side of the market is not able to be successful propping it up higher or lower. So we had this resistance from this 2146 area, which I can mark straight across here, which was the high from Wednesday last week. And today, that's where we came up and we started stalling out at. So that's when I sold half of my position. I sold it pretty much right at the high, and immediately the market started coming down. Now, keep in mind, I'm in half position now. So what happens is I could protect myself. It's a trade that will never turn red on me. It'll always be green because I could always stop out at break even. And that's exactly what happened. As soon as we came below my entry, I stopped out for about, 5 or 4 cents below my entry. So again, it was still a green trade, even though I sold half my position down here. That's just because I was defensive and took profits up here. So I took another trade on TLRY for another reason. So I saw market accumulation here. So not only did we come back, we tested that trend line, but we also defended that area, which I mentioned earlier, where buyers started to step in. Came down, we held that zone, which is, I can mark, right from here. We held it and we came up. Now, you're not going to really see this from a candlestick chart as well, but as price was trading around 2020 to about 2030, we had accumulation. I saw a large order come through on the time of sales. I saw price get up here, as we could see by this upper wick. Price did not actually trade up here, indicating that we see from that upper wick. But because a ticket came through and a large order swept all the offers, price actually had to trade up here before it started coming down lower and actually trading at normal price before that buyer started accumulating his position. So I saw that. I entered another position. There's a very tight stop right below the low. Again, this is a very strong area where we want buyers to defend it. And then we came up, and I was focusing on the 1-hour chart the whole day because this was telling me my telltale sign. For every time we moved up, we rejected, moved up, rejected. So today was a little different. We moved up, but we were holding above. We were actually consolidating above VWAP, above the trend line, and it was the first day that we had buyer interest where the market was not moving down. So again, I was in long, and I was focusing on a 30 and a 1-hour chart to completely eliminate all the noise that I saw. So it was kind of a stress-free trade the whole day. It was consolidating, but it was not something I had to actively watch as it wasn't very volatile. We came up, we broke above that resistance with very strong volume. And if I go to a 5-minute chart, let's see what we got here. We broke above, and every time we were pushing up, we hit that resistance point, and that's where I scaled out. We had very strong volume compared to what we see. I scaled out right here at the 2261, which is a major resistance from that daily chart. We failed to get above on a 5-minute and a 15-minute chart. So I had 25% of my position remaining. As soon as we started pushing up and then we made a quick move down after failing to get above 23 bucks is when I sold full position. It was a little over a 100% gain on this trade. Very good execution. It's all about following the process. All you need is price and volume. It tells you the true story. You have to eliminate all the noise from your charts. This is as clean as it's going to get from just analyzing, reading price, and understanding market context. So now let's get into the S&P 500, which was the trade from yesterday. If you are learning something from this video, I'd greatly appreciate it just for 2 seconds. If you could pause the video and smash that like button down below for the YouTube algorithm. The plan this morning on the S&P 500 was we didn't have too much context, so we needed more market generated information to get a little better picture of what the market actually wanted to do. And us as traders, we have to come up with these levels and just have no bias and trade just these areas. So price was stalling at the 3740 supply zone in pre-market, and it was having a hard time getting above. So if price did want to pull back, we had a little demand at the 3723 area, which can support us. So just to get a little bigger picture, we did at the time, this was on a Monday, this was yesterday. So the Sunday night futures were gapping down. It was pretty bloody for the first, 30 minutes of the open. And we actually bounced that demand. And then throughout the whole overnight session, we rallied and we hit the supply zone, which actually was where we rejected on Friday. So pretty strong level. The market opened up. And from the opening bell, it was not having a hard time moving down. And it wasn't having a hard time moving up either. We were just stagnant. We were trading in a 10-point range for a 15-minute period. And, comparing to Friday, we were getting 10-point ranges in a 5-minute period. So usually at the open, we get crazy price swings, but it was flat. The participants were basically agreeing on price. So this is where a lot of traders fail at. This is where a lot of traders don't have the mental game to have patience and wait for the market to generate you these signals and the market to tell you when to actually have a position and when to actually be a spectator. So the first 15 minutes, I was a spectator. I was seeing my plan actually, start to develop, but I needed price to validate what price was advertising, what my levels were advertising at. So at this time, I had a little support level, which was actually the low on the first 3 5-minute candles. So a break below it would have confirmed this trade to the downside. So not only did we have a break below it, if you go to a 1-minute chart, you're going to see it a little better than what you would on a 5-minute chart. So we came below it. I saw pretty aggressive pressure coming through. Volume wasn't too crazy, but this was at the same time I saw some pretty bearish prints on the tape, and the VIX was also rising. So I took SPY puts. If I pull up E-Trade here, I took SPY puts at 9.45 at $1.32, and I sold my full position at 9.56 for $1.86. So about a 54-cent gain per contract. So going back to the chart just to see where I scaled out. So I'm sure a lot of you had broker issues. I know for me, I was in the trade. It didn't say I was in the trade, but I saw my ticket come through on the tape. So I knew it actually went through on the open market, but it never said I was in. So it was kind of a weird day for brokers, not filling orders, canceling orders, filling you 10 minutes later. But the market sold off about 20 or so points from this supply imbalance right into our first demand target, which is 3723, and immediately buyers stepped in. Price sold off and buyers stepped in right away around the 3720 area, which is a key level. As soon as buyers started stepping in, I sold my full position. It was 20 points. You can't complain about having 20 points on 0 days to expiration SPY contracts. Again, they move fast. Could I have gotten a better fill lower? Yes, but I didn't really have any true confirmation other than, when the buyers first started stepping in and bounced that demand. So some may argue, this may be a valid point for me to go long, but I don't like being in a put position where my trade and my original thesis was correct. And then we start selling off. I take profit down here, and I don't want to take profit and right away go into a long position. Yes, it would have worked out, but how would I have known that the market was going to continue going down and my puts would have been, double or triple what I bought them at? So we did come up. This was kind of an artificial, seemed a little fishy to me, kind of rally. It was an uptrend, but it was very low momentum compared to what we saw in the first, 10 minutes. We rejected supply again. It was hard to get super bearish on this. We did sell off. We bounced off VWAP, and the market all day long was super strong inside of supply. No real confirmation to get short. It's like stepping in front of a moving train. If you see the train coming, get off the tracks. If, once the train passes, you could always get back on. Same thing with trading. You don't want to enter a position when you see the train coming. You want to wait for it to stop. You want to wait for it to get past you. You want to wait for it to slow down, and then you could always get into another position if the market confirms it. So all day we had strength, Pullbacks were getting bought up. Buyers were very strong from this demand, and we rallied pretty much, closed very strong. Another solid plan was WKHS. I like this to the long side. If we could hold value and base above supply at 3652. We were also wedging, which was also getting super tight. We were making highs, we were making lower highs, and we were also making higher lows. So it was getting tight. We had supply. And if we go to an intraday chart, what I saw here was the first 5 minutes we sold off. And this goes with any stock, any market. You have to understand if sellers are present at supply, they have to get rewarded. And the stronger the imbalance, the faster they're going to get rewarded. So the fact that price could not really sell off too strong from this area, we were holding, we were consolidating, and then eventually around 11 o'clock Eastern, we did rally. We finally broke above that downtrend wedge line. We got above it, and this right here inside of supply, we were basing, we were holding value. Not only that, but we back tested that downtrend line, and this created new demand. So you have to look at the market a little differently. Supply imbalances don't really mean to short the market, and supply imbalances really don't mean to long the market either if we ignore it. You have to understand which participant is active, which participant is going to get rewarded, and which participant basically is going to be underwater or are going to get a little frustrated if the market isn't moving their way. So this is telling me sellers aren't very strong after multiple attempts. Buyers held this up. Buyers were pretty eager. I had a starter position at 36.75 on the equity, and this ran up to 40. Missed the all-time highs by, I don't know, 20 or so cents. So very good trade. I actually still have a starter position on this. I scaled out by end of day. Not going to be the biggest trade, but it's all about the process. As long as you have consistency in your trades, it's really all that matters. And then a couple other things. Boeing played out a little differently compared to what we wanted to see on the pre-market plan. We wanted to reject supply, pull back into demand. Instead, we opened up, we sold off. And again, this is where you have to be patient. This is where you have to recognize different opportunities in the market. Even though we were at demand, and this was not a very strong imbalance, there was really no confirmation. The market was too choppy. And when the market isn't cooperating, when we're in a tight range, it's best to just stay away from the market. The market's balanced. Let it do its thing. Wait for momentum, wait for volume, and then you could have a nice trade. Yeah, you could have made profit off this trade, but I just didn't really see any clear setup. Even though we bounced off of demand, we were kind of flat. So I hope you all enjoyed this video. If you did, just smash that like button for me. Also, subscribe to my channel, follow me on Instagram, and if you really want to learn more, make sure to check out my website with more details on the course. Talk to you all at the next video. Peace.